What policy action can be taken, do you think, to change hearts and minds in the market? What is shock and awe?
Well, all policy actions that can be taken really have been taken. And it wasn't just taken now. It's been taken for the last 9 years. It's kept the market up. But I think we've come to a point where the ammunition just doesn't work any longer. We did studies on the 1 year and 6 month rate of change of the 30-year bond. You've never had a 10% correction when the 30-year bond had the rate of change that you had now into the January top. The 30-year bond yield was down 32% over the previous 12 months. Not only have you never had a bear market, you've never had a 10% correction when bonds have done so well. So it's something different this time. Most likely, we've had such a influx of liquidity over the last 9, 10 years that no one needs the liquidity. Anyone who wanted to borrow could borrow. Anyone who wanted to buy stocks already bought the stocks, and the next direction may be down.
How do I value a stock when I have no idea what the P is, and to be honest, considering how much guidance has been withdrawn at the moment, what the E is?
Well, we believe you can never value a stock. You can only look historical earnings. We really never know what future earnings are going to be. It's just a best guess. And now it's a time we really can't even make a best guess. So we don't try to value stocks based on PEs. Try to value stocks based on the general direction of the company, as well as the general direction of the market. So in that sense, the general direction of the market at this point is clearly down.
So how are you positioned right now, Milton? Because you went a little long on Friday, right?
Yeah.
So knowing that we were likely to see some further down days and big down days, and today, right now, we're down more than 6% on the major indices.
Yeah. Well, we're positioned flat now. I wish I could say I called this crash and we're positioned short, but we're not positioned short. We went flat in January, so we were flat during the decline. But we were fooled, as other people are fooled. The nature of the decline was such that it looked like terminal action. Highest volume in 9 years, 5-day volume in 9 years. Then when we checked history, the crash of 87 and the crash of 29 didn't end until you saw the highest volume in history. Now, in 2008, though, you saw the highest volume in history in September and October, and it didn't bottom the market. So we're really a little bit lost here and trying to play it a little bit cautious. But we do see the potential for very, very strong downside. I want to point something out. In 1987, no one knew why the market was declining, yet it declined some 30%. In 29, no one knew why the market was declining. They didn't know that a recession had begun. They didn't know that there'll be deflation. It's actually an inflationary phase at the time. Now we know why the market's declining. So you can use your imagination to give us reasons for it to decline even further. Coronavirus really hasn't taken hold much in the United States yet. If it does, you can certainly see more panic in the future. So we're using the 2008 scenario as a possible further decline.